Keeping our eyes on Canadian earnings that are reporting their most recent quarterly results. Mullen Group, for one, is front and center for us today. And we are now joined by the president and CEO of Mullen Group, Murray Mullen. Murray, nice to be able to catch up with you and get your thoughts on what's going on, what you're seeing in terms of economic activity today. But let's start with your previous quarter and the profit that looked quite good. Of course, it seems as though the government wage subsidies certainly was a bit of a help there.
Hi, Catherine. Great to be back. I think, we've seen a pretty good resurgence in the economy, particularly from the consumer-driven part of it. And we saw that really manifested into our, what we call our less-than-truckload business and also our logistics and warehousing business. But more than that, we're starting to see some recovery. It's better than the second quarter, clearly in the rest of the economy here in Alberta, tied to the specialized industrial segment that we have. So we didn't hit on all cylinders, but the Canadian economy is not hitting on all. But I think we did pretty well, and that's why you saw some pretty solid numbers. Now, the government programs also came in, kicked in, and that covered off for the business that we lost. They gave it back to us. And so all in all, we had a really good quarter. I'm pretty pleased with that, to be honest.
Yeah, I'm sure, because obviously these have been very tough times. We've been talking through them for sure. And even prior to the pandemic, you and I have been talking for years now about the negative impact on the Canadian energy sector and you having to navigate through that. Murray, at this point, and you did. And how are you thinking about strategizing the business? I mean, you've made an acquisition in Mississauga in the distribution area of the market. How are you thinking about the next leg for the Mullen Group?
Well, when we take a look at what's happening in the economy, I think we've come to the conclusion, and I think probably a lot of others, not just us, but from a strategy standpoint, the safest part of this economy right now in Canada is the consumer part. Now, the consumer remained, I'm amazed at the resilience of the consumer. They went out and they spent as much as they ever have. They've spent differently, but they've certainly spent about the same amount. So that really supports our LTL division. It supports warehousing and logistics because the consumer is now not going just to the storefront. They're having it delivered right to them. So the consumer is spending. They're changing the way they spend. They're very demanding. But we, from a strategy standpoint, say we have to be focused on the consumer part of the economy. You mentioned our acquisition in Mississauga. Well, where's the biggest consumer market in Canada? It's in the GTA and Eastern Canada. So we're going to expand our footprint out there. The capital part of the economy, we haven't seen business get confident enough yet to really get that part going in the economy. So until we see that, the best part will definitely be the consumer-driven part of the economy, and that's what LTL and warehousing and supply chain management really is. And thankfully, that's 2/3 of our business.
Wow, that's a large percentage. I didn't realize it was so large at this point. But Murray, then are you also believing that that the changes, the consumer behavior changes that we've been witnessing through this pandemic in terms of buying online and having it delivered to your home, do you see that as being a structural change? I mean, you must if you're making these acquisitions.
I think that change was already happening pre-COVID, but I think what COVID has spurred is that consumer to change dramatically. So consumer habits, once they start to change like that, will they go back? Will all consumers go back to the storefront, or will we just order the package and have it online, order through our favorite store or Amazon? But it's delivered now as packages. Not the consumer going to the retail store. The retail store has to go to the consumer. And that's where warehousing becomes, and final mile and LTL e-commerce becomes a very, very important part of meeting how that change is happening. So it's changed very, very quickly. I'm delighted to say that our business model can adapt to that because we have a high touch point on technology, and that has allowed us to adapt and pivot quite nicely. But LTL, less than truckload, we have just pivoted from going to the storefront directly to the consumer. We see that trend not turning back. To go to the consumer, though, you have to have this terminal network that you've heard me talk about, and our shareholders have heard me talk about. You got to have the terminals to be able to get quickly to the shareholder, to the customer. And that's a very big part of our strategy. So.
And what will that mean going forward in terms of further merger and acquisition activity? How aggressive are you going to be at this point?
Well, we exited the quarter with $100 million plus in cash on the balance sheet, and we've got unused bank lines of about $150 million. We haven't never tapped our bank line, and so we're looking at these opportunities right now to say, how can we use it to grow? But I've said to all of our shareholders all the time, look, I don't do acquisition to grow. I do acquisitions when I see that we can acquire something and then add value to that acquisition that we make. Now, that might be through some synergy, that might be using this new acquisition as a growth platform and building around it. But that's how we view the acquisition market. But suffice to say, I would tell you, there's a lot of opportunity available right now. This is a changing world. We're well positioned, both capital-wise and with our business structure, to be able to look at those opportunities. And we're going to be active in that market. We're going to continue to do that, for sure.
Murray, yeah, and you and I have spoken for so many years now and gone through the ups and downs of the negative impact on the energy sector, and you certainly sound really quite optimistic about the future and the Canadian economy. I do want to ask you at the same time, though, with respect to the Trudeau Liberals surviving a confidence vote yesterday, do you have concerns in terms of perhaps more confidence votes coming and what that might mean in terms of, as a business person, needing certainty and stability?
Oh, boy, Catherine, you probably touched on an issue that I think a lot of business people and a lot of people are trying to think about, that I don't think the consumer thinks about. The consumer is the beneficiary of the government handing out money or supporting the economy or doing whatever you want to call it. I have my own personal views on whether that'll work out long term or what price has to be paid. Because I come from the viewpoint that there's no such thing as a free ride. So if we give something today, you must pay the price down the road. If it was a free ride, then why in the heck don't we just do more of it? So I would say to you, I'm concerned about that. In terms of Western Canada and the resource development, clearly the Liberal government that we have in power and the Trudeau government is not a big a believer and a big fan of the resource development, and that will really hurt Western Canada. Probably long-term will hurt Canada as well, but that does not appear to be their concern at the moment. But on the natural resource front, my general sense is it is not going to stay down forever. Commodity prices are going to change, and we're going to have a bit of a rebound. Will it ever go back to where it was of the heady days? I doubt it, but I would be very, very, very surprised if we don't see a recovery of sort, because the capital is not here right now. We're totally underinvesting, and eventually that will hit commodity prices, and then, of course, that'll hit the consumer again. When they get hit in the pocket, they're going to scream. But we're not investing, and eventually that'll come back to bite you if you don't invest.
Yeah, absolutely. Higher oil prices, potentially higher inflation hitting the consumer. Murray, good to catch up with you.
Always a pleasure. Thanks, Catherine. Take care.
Thank you. You too. That is Murray Mullen. He's the president and CEO of the Mullen Group.